welcome back. You're with us right here on Indian Open. Markets making record highs, budget round the corner, lots more to keep an eye out on. Macroeconomic data, at least the IIP's turned a little bit positive, but let's see how inflation stacks up. Vikas Khemani, founder at Carnelian Capital Advisors, is joining us right now to discuss all of these factors and much more. Vikas, thanks very much for taking out the time. It's looking like somewhat of a rush right now to get into the index and get into the markets as such ahead of the budget. The world seems to be digesting all the various information and every event that is taking place in its stride. At least the equity markets are. Globally as well, still perched at record highs. For India, making record high one after the other. What's your sense as to how the markets are likely to do in this coming year?
Hi. So I think, there are lots of events which keeps on happening, and, we have to kind of decipher and make out what is a sort of medium term to longer term trend, because, if you can get lost into small events or everyday events, you will probably miss the bigger picture. And the way I see the bigger picture evolving from here, I think, when as far as India is concerned, we are just emerging out of a, long drawn liquidity crisis which started from the ILFS. We are also coming out of, huge amount of reforms which were carried out, by the government, which also got followed by a liquidity crisis. So we had, a lot of problems getting combined together. And I think we are beginning to see some sort of, stability and liquidity getting towards risky assets, which is coming out of complete risk averseness. Similarly, if I were to look at the global environment, there also we are seeing from a risk off or a reverse averseness to a little bit of more risk appetite towards emerging market kind of environment. 2013 to 18, we saw Fed was getting back to normalcy. They were tightening the balance sheet, raising rates. 2019 was the first year where they stopped raising rates and started creating a way for further expansion of the balance sheet, which is going to create two situations. One, the dollar strength will go away and dollar will start weakening, and secondly, I think the liquidity towards emerging market will be fairly easy. So I think one of the precondition of getting the risk appetite back on table is an easy liquidity scenario, and one of the precursor for risk off is a tight liquidity. So I think we are seeing easy liquidity scenario emerging, and that is going to remain irrespective of a short-term geopolitical event, or that is going to remain irrespective of any short-term tactical event. So if you keep this broader picture in mind, to my mind it appears that we will see a structural or sustainable scenario at least for 2020 and 2021, where there will be easy liquidity scenario which will feed into getting growth back on table, especially as far as India and emerging markets are concerned. So I remain quite positive on broader Indian outlook. We already have seen some sort of easy liquidity flowing into equities, and this will this is only part correction of the sort of pessimism which we saw built into equity, especially in the wider market, and that has kind of got corrected, and I see this sustaining throughout this year and the next year as well.
Because so easy liquidity finding its way to the equity markets have led to some unnatural valuations for some, even some mid-cap names now that are starting to perk without any support coming in from the earnings side of it. So do you feel that could actually be a very tricky situation to be in, where you have a lot of liquidity, people want to put money into the equity markets, and they're in a mad rush to start investing, but the supporting fundamentals seems to be lagging a bit?
So that is where I think we always make a mistake. There is a sort of theory of reflexivity. As I was mentioning, that one of the biggest precondition of starting the growth, accelerated growth, is an easy liquidity scenario. Our growth also, sort of slowed down to 5% or below because we had no liquidity, or liquidity was not reaching to the users of the capital. So I am of the belief that as the liquidity situation eases out, as the credit availability reaches to the users of the capital, there's enough and more demand in India to feed into the growth. So I think one way to look at it, the markets are high, and earnings growth will not pick up. And right now my market hypothesis is that earnings growth will pick up, and I also believe that earnings growth will pick up as the liquidity scenario eases out. And because ultimately I am not of the belief that there is a demand problem in India. It is a supply side problem in India, which is about availability of credit, and that's the reason single biggest variable we are watching is that how much credit is reaching to the users of the capital, which will feed into demand, which will feed into growth.
Okay, do you feel that consumption will turn the page in 2020?
As I said, that I think it's again a cycle, and it also accelerates with the why. Just go back and say that why the consumption slowed down. Automobile, housing, finance, which are largely dependent on the credit, had an impact on the because of availability of credit, demand slowed down, and whatever money was going into the economy, which was creating jobs, which was creating a lot of keeping a lot of allied sector alive, especially the SMEs and all, I think again got constrained, lost the business. And same way, I think as it picks up, you will see the same wheel turning positive, and the demand will revive, job creation will happen. Of course, a lot of push from the government would be needed. How do you get this risk appetite back on table? And that is where a lot of measures are being taken by the government, whether it was last stage funding by on the real estate projects, or SME recognition of NPAs, and bank recapitalization, and many more. So I think, but the challenge with the risk appetite is that it comes back slowly. It never comes back it goes away very fast, but it comes back very slowly. So I believe that there will be a slow and steady improvement. It won't be overnight, it won't be very fast, but I am quite positive.
Growth revival seems to be key right now, Vikas, at least from Budget 2020 standpoint. Really innovative, out of the box thinking and measures required to make sure that we get our growth back on track from the troughs of 5% that we're seeing over the last 1 year. What do you think, or do you have anything in mind which could actually be a good move that the government could make in Budget 2020 that could spur growth?
So I think one very terrible situation that happened, especially in the last 12 months, which is a fallout of drop in tax collection, dropout. I think government spending has gone down significantly. And if you see in last 4 or 5 years, government spending was the one thing which was keeping the flag high, and still whatever the growth number we had, that was keeping holding the battle. Private sector spending has still not picked up, and it will still might take time to pick up. So government has to pick up the burden of spending in the economy, and we have seen that has gone away, especially in last 12 months. So we do not mind even fiscal loosened little bit, fiscal losses, deficit is kind of loosened little bit, but government spending has to come back. Once the government spending comes into the economy, I think you can have the rotation going, and the slow and steady improvement in the private capex also happening there. But I think, in my opinion, in this environment where we need the urgent growth back, government has to lead the spending.
Okay, Vikas, just one final question from my end. We have the former Steel Secretary coming up as the next guest. This sector has seen some reforms. Are you enthused by it, or would you want some more to happen?
No, I think there are lots of I think whatever has been done for the coal, it's very good. So I think slow and steady reforms should be done. There's no question on that. In my opinion, and again, I don't know specific thing about the steel sector, what reforms could be there, as I am not expert on that. But one thing in general, I know that in India, one side we have a good infrastructure, or let's say in coal we have a huge amount of coal available, and other side we were importing coal, and right now the bottlenecks are there in between. So we need to remove bottlenecks for similar kind of things, where one side there's a demand, other side the supply, but we don't have enabling infrastructure to facilitate that. Same thing is happening right now in the credit growth. We have huge amount of liquidity, but we don't have, money is not reaching to the users of the capital. Same way we had in coal, same way we had in power, same way we have. So every sector we have, there's a power demand, but we don't have, and there are power manufacturers, but it's not reaching to the right sector places, and both sides are suffering. So I think there are many such sectors where we have these bottlenecks being created or being there. Now, how do we resolve that through a structural format is the key to the resolution of India growth story.
Well, Vikas Khemani, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning. Well, that's Carnelian Capital. Hopeful of some more reforms and hopeful of some impact of some of the reforms. Speaking of reforms, the President of India has just given his assent to the amendments made to the Mines and Minerals Act. The aim is to ensure that iron ore supply, one of the aims is that to ensure that the iron ore supply does not get disrupted when the mines come up for auction in the month of March. Steelmakers should be happy. The move comes at a time when steel prices are also on the rise and volumes as well have shown some signs of pickup and may pick up. All this may paint a rosy picture for the sector that's influenced by a number of global factors as well. So should one start celebrating just yet, or are there some more measures that can be undertaken in order to smoothen the process even more? Joining us to talk about this is someone who took big decisions that influenced the sector's performance as Steel Secretary, Mr. P.K. Misra, who held the ministry earlier, joins us right now from Delhi. Mr. Misra, good having you. Thanks so much for joining in. This is Neeraj here. Good morning. Are you happy with the changes that have been done in the very recent past, sir? And can they be a catalyst for minimal disruption for the steel makers?
Well, I feel that some of the measures taken by the government on the Mines and Minerals Act to facilitate iron ore supply are really welcome. And we do, I am firmly of the opinion that India can become a very major power in the steel business in the world. And I did say so when I was Steel Secretary, and I still believe so. I think we need to understand that India, with its vast population, vast geography, as it grows, is going to require far more infrastructure. Also, high quality infrastructure which requires steel. Besides this, car production is bound to go up, though there are, of course, right now some slippages. But I guess these kind of things happen in the course of development. And therefore, we must take steps to organize the steel sector in a much more scientific way, including producing high quality steel, which we still lack. Today, total steel consumption in the country is just about 60 kgs per capita. It should go up to 200 kgs per capita if we are to develop as a modern economy and reach the middle level income economies. So iron ore, of course, is very important. And what we need is really a long-term policy which is not tinkered with by either governments or the judicial system. And therefore, people can actually plan to invest money in iron ore mining, which will produce high-quality iron ore, beneficiation processes. Because even if the steel quality is not very good, China has shown that we can actually beneficiate a lot of the ores and make them far more useful for ourselves. So I think the long-term steady regime that is required on the regulatory side is very important for the growth of the steel industry. But I'm pretty sanguine that steel is going to really grow in the years to come, and we should prepare for it. We should not have to import. Right now, we are fortunately not importing till 2018, though of course some imports did happen before that, but very marginal. But my view is that we should actually be exporting something like 30 million tons of steel a year and bring in some valuable foreign exchange for India.
Well, and hope certainly pinned not just for steel but for the other pockets as well for that to happen. Mr. Misra, a conversation that goes on, and I would want your view here, a conversation that goes on is that Indian steel large caps are not quite going out and setting up capex, so the confidence around the cycle is not quite there. The one throwback at that is that because these companies are getting large capacities at the NCLT, they are in that fashion doing a bit of a capex on their own balance sheets because they are using that money to buy fresh additional capacities, and therefore they would not have the capital to anyways do fresh capex. What would your sense be? Is the lack of capex due to this NCLT issues alone, or is there still some lack of confidence about the pace at which the cycle can turn around?
I think it's mainly a question of mismatch of resources. I think people were very ambitious who set up the steel plants and didn't have the full resources to do it. Also, they didn't adopt the best technologies, and this is the reason why some of them actually failed. If you look at the total production of steel in the world, 50% is by China. We are something like 106 million tons. China is about 900 million tons. Now, with the size of India, its population and so forth, there is no doubt that demand is going to be there in the years to come. We need at least 300 to 400 million tons of steel. But at the same time, if you are not going to produce quality steel and you're not going to produce high value added steels and only going to produce raw steel and pig iron and so on, your profitability is bound to suffer. Now, people have been investing, industrialists have been investing basically in manufacturing raw steel and not giving enough attention to R&D to bring about quality improvements and achieve higher value added steel, which gives them a far more staying power because you make more profits, and therefore you can expand faster, you can expand in I would say geometric terms, you can expand by about 20% per year capacity if you really want to do that, and you can export steel. So I think the cycle that we just witnessed, steel industry going through the NCLT process, many of the big steel plants suffered because of that, was because there was lack of resources. And also there was lack of application of resources in the right manner. So this is something that the steel industry in India should learn from and try to evolve into better quality steel makers.
Mr. Misra, do you in a way also believe that the steel industry, which is a feeder to industries such as infrastructure, the auto industry, that could also be a problem, because both these industries are currently witnessing a slowdown, and therefore the demand itself is not as high as it would likely be.
Okay, so what is your question?
So what my question is that unless and until we don't see an on-ground pickup taking place in the infrastructure space, which again needs to be backed by the government, or we don't see a turnaround in consumer sentiment where they're ready to make big ticket purchases within the auto space. Auto manufacturers have taken production shutdowns, and therefore the demand could suffer for some more time.
Well, I'm not sure whether I've got your question, but I think, as I said, the steel demand is bound to grow, and we have to prepare to make better steels, better quality steels, and also to become net exporters in a big way, because we have the natural resources. We have lots of iron ore of all qualities, some very high quality ore and some not so high quality ore. And also we have coal, though coking coal is what's required in steel. Now, we don't have so much of coking coal, but we do have some coking coal which can be actually refined, made better, and used more effectively for steel making. The rest would have to be imported. Well, a lot of countries do that and still make steel profitably, and because they produce high quality steel. Take Japan, for instance. They import everything, and yet they make, they're big steel makers in the world. We just, overtook Japan recently, and till now they were the second largest steel producers. Now we are the second largest in the world. But we have a long way to go, because if we have to run a big country like this, and the demand is bound to grow, and we still have to make a lot of infrastructure. We have to invest in capital goods. We have to invest in high quality housing. and cars and so on. So the way forward, as it looks to me, is that we need to actually, perhaps the government can think of, providing some incentives for higher quality steel production, so that the cycle kicks off.
Right.
And we have good quality steel in this country.
Right.
Also.
Which was my question, Mr. Misra. You spoke about infrastructure, you spoke about real estate. These are industries that use steel in a big way. So this economic slowdown or the downturn that we've been seeing, where much of the demand seems to be curtailed from all of these bigger industries which use steel, do you feel that this is just a short-term aberration? And like you said, I mean, you are on the road to seeing a demand pickup. Steel consumption is likely to go up. But for now, this economic slowdown, has it had a major impact on steel manufacturers?
Well, there was a big slowdown till about, I would say, 3 years ago. But now it's picking up. The prices have picked up. And as I see it going forward, steel should be growing faster. And well, in the last, about 10 years, it's grown at an average of about 4% per annum, the demand. But I think it should easily go up to 7, 8, 10% perhaps if the infrastructure growth picks up and so on, and the rest of the economy picks up. There is, of course, a high correlation between growth and steel requirements or steel consumption. So usually the elasticity is higher than 1, which means if you grow at about 8%, then you should be actually, there should be a growth of about 9 or 10% in steel production to maintain that growth. As to the general economy, I guess there will be a turnaround, and therefore steel production should also go up.
Just a couple of follow-up questions to the first answer that you gave, Mr. Misra, about you being hopeful, and I think a lot of other people are hopeful of the impact of these amendments that the government has done to have a positive impact. One of the things that still remains is the window for removal of mine infra, which according to brokerages at least who track this space, believe is a sticky issue because the existing merchant mine leaseholders have about 7 months to remove the existing mining infrastructure equipment or negotiate with the winning bidder, because at least people who track this space believe that this might be a tricky issue because it might cause a potential delay for the winners of the bids to get access to those mines. Small issue to tinker around and resolve, or do you think that something needs to be done about this at the quickest possible fashion?
Well, as I said, there are 2 things which are required for mining to really do well in this country and for long-term investments in mining. One is to have the regulatory regime a little more steady over time, whether it's the government or it's our system. Only then is it possible to really invest in, today our investment in mining, so far as underground mining is concerned, is very little. Most of the mining in coal as well as in iron ore is surface mining. But you do find very good quality down below, which requires, of course, much larger investments. And therefore, who would invest? Only a person who's sure that he has the rights to mine for a considerable period of time. Now, if you give 30-year leases for mining, maybe that's not enough incentive for deep earth mining. Maybe you need leases for a longer period for the investments required. So these are issues that the government should pay attention to.
Okay. So you reckon that the extension of the lease tenure could actually result in higher investments from the existing players into deep earth mining as well? Would it need to be accompanied by something else too, which if you had the chance to change, you would change?
No, I think just in extending the lease period to maybe 90 years, 99 years, would be sufficient. And also, of course, as I said, I mean, there should be no flip-flops on policy. People should be aware that there will be a level playing field which is laid down for 100 years, so that they can make informed choices about investment. And then, of course, once you've got that in place, you need to give out the leases, for which you will have to have auctions. And I think then perhaps, I mean, today there's hardly any foreign investment in mining in India. Maybe some foreign investors would come and do some deep mining, who have the technology, who have the experience, and who have done it in their own countries. So I think just having a longer lease period should be sufficient.
Okay. Well, Mr. Misra, we appreciate your time this morning and giving us some of the insights with your experience onto this space and the recent developments. Thanks much for being with us today.
Thank you. Bye-bye.
Well, that's the former Steel Secretary talking about a couple of things. Well, as is the general opinion, hopeful and bullish about or optimistic about the recent amendments that have been done from the government side. Can something be done more to increase mining? Well, he believes extend the leasing period, and that could be the single biggest trigger for this to happen, accompanied, of course, by some other moves as well. The markets for themselves, though, have come off a little bit from the highs of the day, especially the banks, which are now just about 87 points, just 0.28%. At a point of time, the Nifty bank was knocking on the doors of 0.5% gains, so it's a bit of a cool-off, but early days as yet.
Yes, we'll hand it over to the team of the F&O show, who takes forward all the market action from here. From Neeraj, myself, and the entire team, let's put IO together. Thank you so much for watching.
Puravankara has been building homes for more than 45 years now. So today, what is the future of living?
You're saying that give people the ability to enjoy a higher quality of life.
Give affordable housing. We take out land free for the road. Why not for the housing?
People are going to look at sustainable societies.
They are no more going to be happy with just blocks of houses, roads and parks.
A sustainable